every single party, from the regulators to even individuals involved in the industry. And it is no surprise, this dedication is also represented by what we see today from Malaysian Takaful Association, MTA. So on behalf of EY, we wish to congratulate MTA for this vision in driving for this report to be produced. I also wish to thank MTA, of course, for having the trust in us to partner them to develop this report. Hopefully we can do this more regularly for the benefit of the industry. Malaysia is, of course, where it all starts, and EY's global insurance study in 2014 also identified Malaysia as one of those countries with a market with an attractive demographic mix and economic growth, as well as a strategic base for development of Takaful. EY report on insurance called Malaysia the investment destination for Takaful. Ladies and gentlemen, without going any further, and I think I leave it to the authors and developers of this report to go deeper into this report later. But once again, congratulations to MTA for this fantastic initiative, and thank you for having us here today to present this report together with you. Thank you.
All right, thank you, Dr. Rauf. Next, please help me welcome Yang Berbahagia Encik Ahmad Rizlan Azman, Chairman of the Malaysian Takaful Association, to also address us and say a few words.
Thank you. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi taala wabarakatuh. Yang berbahagia Datuk Abdul Rauf Rashid, Country Managing Partner EY Malaysia. Mr. Brandon Bruce, Partner EY Malaysia. My colleague in MTA, Encik Azli, CEO of Malaysian Takaful Association. Member of the press, ladies and gentlemen. First of all, on behalf of MTA, I would like to record my sincere appreciation for you to attend the launch of Malaysia Takaful Dynamics Central Compendium 2015 at the 11th World Islamic Economic Forum. We were fortunate actually, at the conclusion of the publication, the event also happened to be around, and I'm glad that there's a lot of synergy between what WIEF trying to promote and the strategy that MTA adopt, which is collaboration. So the WIEF objective of enhancing economic well-being of people of various Muslim nations and strengthening networking and strategic alliances via exchange of ideas, information and knowledge resonates well with MTA overall mission of advancing the agenda of Takaful industry, in particular in Malaysia. So a bit of introduction to MTA. Pretty much our vision is to provide active leadership and authoritative collective voice for Malaysia's Takaful industry in accelerating this thought leadership initiative for the Takaful industry. We have been fortunate to be able to actually collaborate with EY. Here I would like also to congratulate EY for being chosen the knowledge partner for WIEF to develop what we call a one-stop central compendium. Essentially, it is a reference publication whereby the aim is actually to enhance visibility for those in the industry as well as for those interested in knowing more about what the industry and participate in the journey of Malaysian Takaful industry going forward. So in growing Malaysian Takaful industry business, the agenda, we continue to promote events such as this in terms of collaboration in publication. We also a strong supporter of a couple of major events in Malaysia, Example, the Global Islamic Finance Forum, the Takaful Rendezvous, and similar event where we share and exchange knowledge, including best practices. So our collaboration with EY to produce this first ever central compendium on the Malaysian Takaful industry complements this our knowledge goal. As such, I would like to again thank everyone who has been instrumental and contributed towards shaping and driving the Malaysian Takaful industry. Inshallah, it will continue to remain strong and competitive. And finally, I would like to again acknowledge EY. Thanks for your knowledge, insights and foresights on the development of this thought leadership or central compendium to place Malaysia's Takaful on the global map, inshallah. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Encik Ahmad Rizlan. Ladies and gentlemen, we are now pleased to officially launch and present the Malaysian Takaful Dynamics Central Compendium 2015. Please help give a round of applause for the launch of the Malaysian Takaful Dynamics Central Compendium 2015. Thank you for the photo opportunity as well. Ladies and gentlemen, we now like to invite Mr. Brandon Bruce, EY Malaysia partner, to present the highlights from the report. Thank you.
Right, ladies and gentlemen, good evening. And thank you for attending the launch today. I guess we'll get over the formalities first. Thank you, MTA, for your relentless support and also the vision of coming up with this report. It's been something that's been talked about for some time, and we are finally there. The EY team for putting all the hours in and getting the report out in time. We were out by a few months. I think the past chairman wanted this out by May, but never mind. As long as we got it out, it was great. Allow me to take 15 minutes of your time. We will go through some of the snapshots of the report and maybe just highlight to you some of the statistics that we've got put together. Next. So as mentioned by Datuk Rauf earlier, Malaysia is an attractive market. We've got a very good mix of demographics, very stable economic growth, and a strategic base for development of Takaful. Our insurance report, Waves of Change, ranks Malaysia alongside China, that dot beside the very big balloon there, as a country with higher opportunities and moderate risk, in which the regulatory environment is developing very well. The adoption of best practices within the industry bodes well for Malaysian operators, and we view that it is becoming increasingly important that strong domestic players emerge within the Malaysian industry to become regional champions in the Asia-Pacific markets. We've put this team together for the last 2 years, and we believe that that is the way forward for the industry. Next, Lucas. As an emerging and niche segment of the broader global insurance industry, the global Takaful market is estimated at US $14.7 billion in 2014. Saudi Arabia cooperatives account for about half of the share of global Takaful contributions. ASEAN follows next at 27%, followed by the GCC at 10%. The global Takaful industry is expected to grow by 10.8% CAGR into the next 3 years to reach approximately US $20 billion by 2017. Overall, the growth momentum of the industry will be driven by socio-economic demographics of the major and emerging Islamic finance markets. In the ASEAN region, gross Takaful contributions is estimated to reach around 3.9 billion in 2014, and within ASEAN, Malaysia clearly leads the pack with about 3/4 of total gross contributions. Indonesia continues to grow, and it's now close to 20% already as of 2014. Next. Overall penetration, Malaysia is currently about 5.2% in terms of insurance premiums and Takaful contributions as a percentage of GDP. When you dissect that further, the life insurance and family Takaful market is at about 3.3% GDP, while general insurance, general Takaful, property casualty if you may, is about 1.9% of GDP. 2014 and the years before that, since 2009, have been very interesting because we've seen investment-linked products continue to drive the life segment growth. For 2014, I think that growth was in the region of 18 to 20%, and we expect that this will probably be a trend that will continue into the near future. Expansion of GDP, naturally, and a relatively young and growing middle-class population offer very good scope for growth for both life and general insurance or Takaful. And while we expect that industry growth may moderate this year, the longer-term prospects for Malaysian Takaful remains very solid. Next. In terms of fund assets, the Takaful segment growth has doubled from 12 billion in 2009 to 23 billion ringgit in 2014. During the same period, net contributions increased by about 1.8 times, from 3.5 billion in 2009 to 6.3 billion in 2014. Net contributions from general Takaful grew 14% CAGR, while family Takaful grew slightly lower, 12% CAGR over the same period, mainly helped by the Islamic banking growth, new market entrants over the years, and of course, a facilitative regulatory environment. Takaful growth, albeit from a much smaller base compared to the conventional players, has outstripped the conventional insurance business, which over the same period recorded a CAGR of about 8% overall. Thanks. So in our view, that's a computer, by the way. In our view, the long-term growth of Malaysia's Takaful industry lies in the demand and the supply dynamics, and thereon the interactions between the stakeholders. Very importantly, customers need to interact well with the operators. Operators need to understand the customers well. The regulators need to continue to facilitate the industry growth. And at the end of the day, are we putting out the right kind of intermediaries, the right kind of agents, professional enough out there in the marketplace to continue to drive the business forward? Protection gap studies in Malaysia have been conducted by both Liam and also by actuarial partners. And that study implies that there is very significant scope for Takaful operators to tap further into the underserved markets and explore, on top of that, opportunities to educate customers about the need to continuously increase cover. The potential to realize higher market penetration for the Takaful segment can be gauged by the significance of Malaysia's Islamic and banking markets, aside from its large Muslim populace, of which, interestingly enough, total penetration is currently only at about 10%. The underlying foundations, right at the bottom there, must include a strong regulatory framework and supportive policies which can provide a stable and attractive platform for both operators and their customers. The overarching lever which can further shape and influence the growth of the Takaful industry include effective communications and effective training and education programs. It's all about getting Takaful out there and differentiating yourselves from the conventional players. We hear a lot about digital. So today's digital world in itself will offer creative solutions to improve Takaful's reach to customers. We hear a lot about data analytics, customer analytics, wearable technology, telematics, and of course, multi-channel distribution opportunities. As an aside, it will also be interesting to see how the market and in particular individual operators will structure themselves over the coming years as the license split imperative, which is embodied under the Islamic Financial Services Act 2013, becomes a reality by 2018, unless Bank Negara extends that. We believe that the license split plans, which have been submitted by 30th June 2015, will continue to generate interest from parties which will be seeking expansion opportunities into the local Malaysian market. Finally, if one word could sum up the focus of insurers and operators in the next few years, it will be technology. Economic challenges will continue, but operators and insurers must continue investing in digital solutions with a view to widen margins and provide competitive differentiation. We observe that across all regions, market participants continue to capitalize on data analytics, cloud computing, modeling techniques, with the overall view of sharpening their market segmentation strategies, reducing claim fraud, and of course, improving underwriting and risk management capabilities. There continues to be opportunities to connect to the underserved consumer markets, the expanding middle class and high net worth clients. But to do this, we need to make sure that we continue to innovate, come up with new, better products to service those potential customer bases. Insurers and Takaful operators must target their growth strategies in these high potential areas. Significant challenges will continue to remain in the form of intensifying competition, soft pricing conditions that we're seeing in the marketplace now, and that on leading to tight profit margins for the players. Customer preferences continue to shift. New competitive pressure requirements require that insurers respond with speed and agility. And in this sense, we believe that investing in technology and digital platforms will strengthen relationships with customers across all product classifications and geographies. Very important is to improve the front-end sales, distribution, and customer service, enhance the shopping experience. You never equate insurance and Takaful to shopping, but I guess that's what the insurer of the future should be doing. And at the end of the day, improve back-end operational efficiency and expense management. Accordingly, as an emerging segment of the larger insurance industry, the Malaysian Takaful industry needs to step up its game. It needs to step forward in strategic areas to drive and support its long-term growth potential. The next wave of change is now, not tomorrow. And in this sense, in this challenging and dynamic market environment, the industry needs to rapidly adapt to new risks and opportunities by, one up there, resetting your directions, clearly differentiating itself from the conventional business. Number two, reinventing deliveries by innovating with their products, innovating processes, and ensuring that the delivery channels to meet markets are in place. And lastly, the need to reinvigorate your collaborations with your industry stakeholders, be they your intermediaries, your regulators, and whatever not. So ladies and gentlemen, on that score, I hope you find this report useful, and I hope the report would help you to build a better working world. Thank you very much.
Thank you, Mr. Brandon. Ladies and gentlemen, now the floor is open for all of your questions. So please raise your hand and we'll come to you with the mic so that you may post your question to our panel. Please state your name and which media you're from.
Hi, I'm Daniel from The Age Financial Daily. My question is, what are the current risks facing the Takaful industry, and also with the slowing economy, are you seeing more customers cutting back on their subscription to Takaful?
Okay, on the first question on risk, right? I think for Takaful, the risk is quite universal. Whether it's general Takaful, general insurance, family takaful or life insurance, the risk remains. If you were to split the profitability, for example, the revenue is generated either through underwriting performance, which is basically what's being contributed and what's being paid. So the challenge is really macro. So that is quite generic to most industries. So the other risk that is challenging right now, one of the major performance drivers for takaful, similar to insurance, is also the investment climate. Because the performance of for example, the equity market, for example, for family or life business, where you have very long liability. So, one of the mix of assets is to have also assets that are long to match those liabilities. So in a uncertain market like this, two group of stakeholders are at risk. One is the shareholder, the one that is investing in the takaful operator, because as a shareholder you also invest the funds of the shareholders for current and future revenue. So that will be impacted by the uncertain and difficult investment environment, and for the policyholders as well, because the funds are being managed to meet all the liabilities. So the challenge is really coming from at least at this moment, investment environment. The other one is the norm, which is the technical underwriting, managing claims, ensuring that the valuations are done appropriately, providing sufficient reserve. These are where prudent risk management is even more demanding right now. And I would say probably the third part is a regulatory environment, because more and more reforms are being introduced by the regulator to ensure that sufficient attention and provisions are made for takaful operators to remain sufficiently capitalized to meet its obligation. I think going forward, there will be further reform. We are looking at major possible reform in the general insurance, general takaful segment in 2 or 3 years' time, with the de-tarification of the retail motor and fire coming. So that will those are the challenges, because as a takaful operator, we got to be ready and invest in terms of capital and all that. And on the life and family side, we are also gearing up towards further reform in the form of liberalization of the operating costs, as well as introduction of several measures to intensify the professional conduct of both the companies as well as their intermediaries. So I think you probably get a bit more detail in various, I think in the report is probably also some write-up on those ongoing and upcoming reform within the industry. The other one? Sorry. Sorry, your second question was on?
Slowing economy. On the back of a slowing economy.
Okay. I think there's also a report or a chart in the, probably Brandon, you can pull it up very quickly. If you look at the last 10 years, if you look at the GDP line, it's going down and a little bit up and down. But if you really look at the numbers generated by the Takaful industry, it's like going up and up and up. Yeah. So in fact, our projection, despite the uncertainty and the seemingly challenging environment, we are still optimistic that we're going to continue to generate healthy growth, albeit maybe it's a little bit more smaller. Largely based on those points that Brandon had highlighted earlier in terms of, very still relatively low market penetration and advancement of technology and competition amongst the Takaful operators, as well as the generally amongst the industry, will continue to push the growth numbers favorably. So it is challenging, but I think the factor that the country being under penetration will drive the growth forward.
Just a quick one. What's the reason for the low penetration rate of Takaful?
The one that we always hypothesize is definitely the awareness, because that is the area that we are working hard right now. I think it's also one of the points that Brandon mentioned. Historically, the lower penetration would have been the result of relatively low awareness. And I think possibly the other reason, of course, probably we cannot really quantify, is probably the large vast of segment, which is the low income segment, are not investing or not choosing protection plan, probably because of the affordability. So I think the point is how we're going to address that, rather than why the penetration is low. So the focus is really going forward. Want to make sure that while there's growth is coming really from the middle and higher income, we want to make sure that the penetration rate is quite comprehensive, and more efforts to be directed towards and ensuring protection plans are adequate throughout the larger population. So possibly two lah. One awareness, and the other one is economic considerations.
Could we have another question? Yes, thank you.
Hi, I'm Hafiz from Business Metro. May I know what's the ratio or percentage between Takaful and conventionals as of last year? And the second question is about what's the contributions Takaful to the GDP as of last year? And what your projection for this year?
Maybe we can get Brandon to share.
I don't roughly have that split of GDP between Takaful and conventional, but as I mentioned just now, if you're looking at just the life segment, it's about 3.3%, and general is about 1.9%. In terms of if you're looking at split of premiums, Takaful is currently about 13% of the pie. The other 18 to 87% is the conventional insurance premium. We've seen that growing quite steadily. As I mentioned just now, if you're looking at purely the 5-year CAGR, we are at 8% for conventional, but Takaful is already flying at about 12 to 13% over the years. Sorry?
About the ratio between Takaful and conventional, as last year, how many percent is Takaful and how many percent by conventional?
The total contributions and premium for conventional and
Yes.
Takaful is about 49 billion ringgit Malaysia. Takaful itself contributed about 6.3 billion ringgit Malaysia, and conventional is about 42.5 billion ringgit Malaysia. So in terms of percentage, conventional, I think Brandon mentioned earlier, is about 87%, and Takaful is about 13% of the industry.
I'd also like to now introduce Encik Azli Munani, the CEO of MTA, who has joined the panel as well. Members of the press, we still have time for 3 to 4 more questions. Anyone to post your questions to members of the panel up there? Yes.
Abdul Ghaffar Ismail from IDB. I have 2 questions. One on the readiness of the Takaful industry to comply the Basel III. And second one is you mentioned in the report that the issues of financial inclusion. This is very important, especially for the micro and small enterprise, where they need to have this product to ensure the microfinance product issued by the microfinance institution. So how is the readiness of the industry to introduce this micro Takaful to the micro and small enterprise? Thank you.
So maybe I can get Brandon to handle the first question.
Well, I think for Takaful insurance companies, you typically look at risk-based capital. Basel is more a banking thing, and risk-based capital has already been around since 1st January 2014. Recently, Bank Negara has introduced a new concept paper, which is called the Internal Capital Adequacy Assessment Process for Takaful companies. So that process is supposed to drive you to think about risk and you to think about how this risk is going to affect your capital. It talks about board governance and a whole host of things. It's something that the conventional insurers have had on board maybe for the last 3-4 years, but they're still struggling to comply with that, especially in coming up with a proper capital management plan. What we see in terms of risk-based capital for some of the players in the market, the bigger guys have struggled to meet the internal target capital, but I think that's purely because of the way that RBC for Takaful has been structured. The smaller guys are doing more like above 200 to 300%. So fairly safe, but perhaps some opportunities to risk a bit of capital there. So I think they are doing well, the operators, in terms of complying with the capital requirements, but there will be more stringent regulations coming in short term from Bank Negara, of course.
Also, to add on Brandon's comment, I think that the challenge on the risk-based capital framework is when they want to split the license by 2018. I think that's where the challenge for the Takaful operators to meet the capital requirement will be more stricter. Because now you have only one company, but for those who have composite license, you have 2 companies to meet the capital requirement.
Okay. On the second question, financial inclusion. If you talk about the readiness readiness, I think generally within the Takaful industry is at best very mixed. First and foremost, the industry itself is quite mixed in the sense that the players are in a different level of readiness and appetite. You got, but as an industry, we want to make sure that we drive it more at the industry level rather than at the entity level. So what has also emerged recently was also leadership taken by the central bank to promote a more facilitative operating environment for the interested Takaful operator, because they're going to be launching a specific framework for micro insurance and micro Takaful. That framework is intended to provide some sort of relief in terms of pursuing this agenda, because the major challenge faced by the industry is really to balance the commercial and social agenda. And while the industry is growing and developing its business, at the same time the opportunity to provide and enter the micro segment is a little bit limited. But with the recent possible introduction of a framework specifically to promote micro insurance, micro Takaful, I'm quite hopeful, but maybe quietly optimistic that finally we probably be able to implement or we get more participation and viability of actually making it a reality because the challenge has been bringing the cost of protection to a level that is affordable to that segment. On top of that, the other challenge is really getting the distribution infrastructure which are non-traditional. Because currently, if you look at some of the statistics for Takaful, 80% non-banca and 20% banca. So that means we rely a lot on individual intermediaries. So to distribute, for example, micro Takaful product through the individual agency segment is a little bit cost prohibitive right now. But I think with the introduction of the framework, which will possibly promote new type of intermediary, probably we'll see some penetration into the micro Takaful segment. But otherwise, there are one or two within the industry that is going about promoting micro Takaful product to the micro segment, but the amount and value is relatively small compared to the entire industry.
There be any more questions from members of the press? Okay, no more questions. Perhaps our panel would like to wrap up with a few salient points from today's launch and, of course, from what has been asked by the press, if a particular thing has not been addressed yet. Okay, yeah. All good. Well, thank you so much to panel. Thank you. And also thank you to members of the press, ladies and gentlemen, for being here. I think at this juncture, before we close, EY Malaysia and Malaysia Takaful Association would also take this opportunity to thank the WIEF conference for providing the platform for the launch of today's launch for the first central compendium on Takaful in Malaysia. And also would like to thank all of you for taking out your time and being here. We hope that you will highlight this in the media and have a pleasant day ahead. Thank you.
Thank you. Thank you.